Welcome to Set and Forget Traders, where precision meets patience. This isn't guesswork, it's strategy, structure, and the smart money's roadmap. If you're tired of chasing trades, strap in. We'll show you how to trade like the banks and not against them. If the market noise has been costing you money and peace of mind, you are in the right place. Hit the subscribe button. This is where structure meets mastery. Welcome to Set and Forget Traders. This is yet another week that you're joining us, and we'll be glad to analyze with you. Thank you for staying with us. This is week 33, and we're here to decipher. This is the dollar index chart on the daily time frame, and we'll be able to try and analyze what we're expecting the coming week and what we had from the previous week 32. So join us, and we'll be glad to make a difference in your portfolio, to preserve your portfolio, to protect you from the losses, to add more profits into your portfolio, as that's the intention for every one of us. That's why we're here trading. So the dollar index measures the strength of dollar in regards to all other pairs, and this is a very useful analysis. So stay locked and be keen with everything that you're going to transfer to you. So the red candle here, from our previous week analysis, we could be able to see the NFP, which was on the 1st of August, and the price on the demand chart. We have the demand chart, and we are going to check on the supply chart next. But right now, we are going to just focus. We're going to focus on the demand chart first, which allows us to know what the buyers are doing, and we're able to know where the buyers are taking their profit, where they're making their entry, specifically for buyers. So, coming again from the previous wave, the buyers made an entry at the pivot demand 97.143. They took the price higher into the next pivot, and after they did, it was during the NFP that the price had hit the pivot demand, which buyers made a sure sense to take out the profits, and a reaction of buyers taking profit in line with the fundamentals from the NFP made a very big drop of price. So the red line, which is the main time with the main demand zone, 99.058 is the main demand zone. It's wave 1 of the demand chart. If you're new here, if you see the green line, that means it's a pivot. If you see the red line, those are the main demand zone. And if you see the blue lines, those are the lower time frame demand levels. All right? You can consult us for more telepathy. So this was on Monday, Tuesday, Wednesday, Thursday, Friday, back to last week. So the candlestick of NFP made sure to send price below the demand zone. So the work of the buyers was to take price above the demand zone. All right. So on Monday, the price again tried to push high, but it closed below. And then on the second day of Tuesday, you could be able to see that the high of the day was 99.098, which is around something close to 4 points above our zone. So the buyers took profit at the demand zone. You can see that because they were unable to take price above, so they decided to take the first partials at the demand zone 99.058, which they closed low, and then on Wednesday you can see the price dipped below, because it was a confirmation that the buyers had exited the market, and it was a good chance for sellers to come in and maybe continue pushing. But we don't have any demand zone here, because the main demand zone was at 99.58. This chart only has 3 levels where we are right now: the pivot, the 2 pivots, and the main demand zone. And you can see last week, when you saw what the price did on the pivot, on the main time frame demand zone 99.058. You could be able to tell that the buyers are not having enough orders to push price higher. If we check on the 4-hour time frame, let me zoom it in to you. You'll be able to spot on. Yes, there are lower time frame demand levels, but we are concerned with the main demand zone at 99.58. I'll just drop an arrow for you to see what price did. Yeah, you can see the buyers really tried pushing price higher again, but there was an indecision, and you can see the third bullish candle closed exactly at the demand zone. All right, and then the next candle, you can see it is a bearish candle, which made sellers to come in because it was the first reaction of buyers taking the profit. So later on, price dipped below, and it has been below the main demand zone. All right, that's a very clear, and it's quite interesting to understand that we had a very good entry on the previous NFP trade. All right, this trade here. Why? Because the buyers had already taken their profit at the lower time frame. All right, not the lower time frame, at the pivot, and exactly at the same zone is where the sellers came in because buyers had already taken their profits. Same thing to today, the last week. I mean, the buyers on Tuesday took profits into the demand zone, took their profits, and left the market off to fall. All right, that was a very good signal. So you might be wondering, the supply chart is going to assist us to know what the sellers are doing. So let's roll our sleeves into the next analysis, which is the supply chart. In the supply chart on the daily time frame, which is our main zone of analysis, we are able to see that the supply zone, which is at the proximal line 98.248, and the distal line is 98.026. So since the price was going bearish, the sellers could only and had to take their profits at the supply zone. All right, so meaning the price had to go, the sellers had a one course to follow, to take price into the next supply zone, which on Thursday, before the last day of the week, they took the price into the supply zone, and we can be able to know they took their profits exactly inside the demand zone, because on the next candle on Friday, we can see it was a bullish day because sellers had already taken their profit. This is it. This chart is going to allow us to know what we are going to expect in the coming week, and this is the trade we are going to expect in the coming week, guys. We are right into sharing the setups for next week, and by this we try to say we're going to expect price to go up into the next supply zone. Why? Because sellers are not supposed to be around this level. Then we can't see any supply level inside this order block, but the next sellers, they're supposed to be at the next supply zone because the sellers have already taken their profit. If price was resting above, this was the closing candle of last week, this bearish candle, so we were able to see that the supply zone is yet tapped, so we had anticipation of price coming into the next supply zone because sellers have already positioned their orders. And this week it's closing after sellers have already taken their profit, so next week we are expecting bullish buyers to come into the price. If we check on the lower 4-hour time frame, we are able to see the lower time frame. So shortly, let me share this with you. We are having the pivot. I think we didn't highlight it on this level. This time frame is for swing traders, and if you're not a swing trader and you're an you'll be able to you'll be able to take your trades from the current price into the next pivot. All right, trust me, mark this level that I'm trying to tell you, because it's going to become a highlighter. It's very bad for you to be on the very good side of trade and miss taking your profit. All right, it's very sad. So take your price from the closing price of last week and take your profits where the pivot level is at 99.026. 98.798. All right, take your price from 98.248 and buy that price into 99.798. All right, I've given you a signal, so you're not coming out free. That's around 1500 points. So it's interesting to see that this lower time frame supply levels was used by sellers to take their partials. Why? Because on the Friday NFP, which was this candle, you could see sellers. They opened the wick. This was the opening. No, this was not. Yeah, this was the opening candle of last week, week 32. And sellers had already taken their first partial on the closing candle. So you can see buyers came in because of a reaction of sellers taking profit. And then they tried coming in. Sellers again took their profit on the 4th of August. Again, this was the opening candle of Tuesday. Sellers had already exited. They had already taken their profit, allowing buyers to push price higher. Pushing higher, sellers came in. And remember, there was a key level of demand zone. All right, you can remember there was a key level of demand zone which we had marked, which was a demand zone. So buyers had taken their profit and sellers made an entry back again. All right, so after the sellers made an entry back, you could see price pushing low, and then they had to take now the price into the supply zone, which they did, took their profits on Friday, and now price is pushing higher. We believe that the next week you're going to see this wave again. And it's quite interesting to see the price path that we were trying to tell you. The half of the price path aligns to the lower time frame supply zone 99.047. So this is it. Have your first take profit. Well, let me just highlight it for you again. Yeah, this will be our first take profit at 99.047, and then our second take profit will be at 99.798. Yeah, that's our take profit too. Yeah, and if you're a swing trader, you're going to take your profits at, you're going to take your profits at the demand zone. I'll just delete it. This is supposed to be on the 4-hour time frame, on the lower time frame. Yeah, you're going to take your profit at the main supply zone. You remember? Yeah. So those are the two trades. We are going to take the profits because we are trying to give respect to sellers where they exist. That's why we are taking profit where sellers are. But if we go by buyers, we need to push price. Let me just bring it back. We need to push price into the pivot. All right, I hope that's clear. If you are unsure about it, just consult us and we'll be glad to serve you. Next, we're going to focus on the moving average. This is the retailers moving average. By this moving average, we're going to observe the behaviors of the retailers, and we're able to know what to expect. On the monthly time frame, last month we had a clean buy because the price was hanging at the support and it pushed the monthly candle way above and it closed up. So this month of August, we have seen price pushing below, and we can check on so our trade, we are going to set up such kind of trade on the monthly candle. All right, we're going to have this type of trade, and you can see the half of it is where the support is. All right, so we're going to trade from here up to here where the support is. That's on the monthly time frame. On the weekly, traders trading on the weekly time frame, they were pushed. You see it was quite real for us to see during NFP. Price had reached the resistance, and as what happened, you saw price pushing, closing below, and then there is a resistance here which made sure the weekly candle closes below. So if you're going to anticipate for the coming week, you're going to have this kind of setup on your panel. So this is the weekly kind of setup on your desk, or if it's not this one, you're going to expect the next resistance to be your line of defense. And it's quite interesting because you see the first take profit is half of the next support. That's on the weekly time frame. On the daily time frame, we are going to observe zoom out. We are going to see. It's interesting to see that on Monday and Tuesday, the NFP candle closed just on the support around 98.622, and then on Monday, Tuesday, the support tried to push buyers higher, but the technicals didn't allow. And you see, even on Friday, the buyers have been really trying to push. So we expect that the coming week we might see a push in price. And so if you're on the buyers sentiment of the daily time frame, we're going to expect something like this for the first take profit, or something like this. And it's keen to observe that this is around half of the next support. That's it. So let's check on the institutional moving average. On the monthly time frame, we have our support. We have our support at 97.639. That's where our support is, and our trading range will be to push price higher into the next candle, or because buyers having enough liquidity to push price back into the monthly open, we're going to expect something like this or something like this. This seems fair enough because this is half of the next support. So that's on the monthly time frame for institutional. This is how the institutional plan their trades. On the weekly time frame, we are able to say that the last week we saw price resting on the support, and that's why the institutional pushed price high, and the weekly candle has closed on the support. So this is our big bet. The institutional will plan to push price into the next support and exit here. All right, the institutional will have to push price into the next, and it's quite interesting to see that this support is half of where the institutional is to go. So they'll first exit their profits here, and then they take price into the next major take profit. Yeah, we'll be here to confirm this to you. So it's better to push price into this first and then this first. All right, this is assisting you to plan for your risk in advance. You might be able to know how much to risk and how much to get in reward. The daily time frame looks really quite interesting because you see the highest high of the week was marked by the institutional and by this moving average around 99.103. That was the highest high of the week, and we could be able to spot it because this is the institutional moving average. So the last thing we're going to check is the simple moving average. On the monthly time frame, we were able to have a clear sight of the previous month, which had closed bullish, and we expected a reduction in price, which happened. We are going to expect support from this level, 97.558, which will push price back up and into the next level. So let's have a look of what we are going to expect. That's it. Here it is. The current price versus where we're going to expect price to go. All right, that's on the monthly time frame. The weekly time frame, we're going to the weekly time frame. It's quite interesting. You see, on the week, this was during NFP. We are going to expect that the sellers, they made an entry. Clearly, we saw that, and we took an advantage of it, and they took price into the next support. And it's interesting to see that this week, the candle really closed above the support. So it means to us that buyers are interested to, the market makers are interested to push price back higher. the coming week. So it's a bullish signal for us. So this is the price path on the weekly time frame that we're expecting. Here it is, and it seems to be close to that. All right, so half of it is where the first take profit happened and which pushed price lower, but you expect them to push higher again. So this moving average here is going to be of essence. It will, the red moving average should come into this rectangle that you're expecting the price to come to. So buy into the next candle and manage your risk well. This is the weekly time frame. Who are the traders who are trading on the weekly time frame? And then lastly, on the daily time frame, you're seeing magic. You're seeing magic. No need to explain because we've done so much of it. We've had these levels with us, and it has really provided levels that we don't fathom by our own understanding. All right. So this week we are really going to risk our portfolio with a bullish momentum. Stay blessed, and lastly, we are going to check on the upcoming fundamentals on USD so that we might be able to dodge any unlikely bullet. So let's rush into the next analysis, which is the fundamentals analysis. Thank you.